All right, let's talk about the stock market. Have you ever looked at all those charts and numbers and just felt, completely lost? Like you're trying to read a foreign language? Yeah, you're definitely not alone. But what if I told you that by the end of this, you'll not only get the language, but you'll see that it's not the high-stakes guessing game you might think it is? Let's demystify it together.
Okay, first things first. Let's get the biggest myth out of the way right now. The stock market is not a casino. Seriously. While there's always some risk involved, investing successfully has way more to do with understanding a system than it does with random luck. At its heart, the stock market is just a system. A really powerful one for sure, one that's created a lot of wealth for a lot of people. But it's a system with logic and rules. And the best part? Those rules are way less complicated than you'd think. And today, we're going to break them down. To really get a handle on the stock market, we have to start with the most basic idea of all: what you actually own. And to do that, we're going to use an analogy that I think you'll find pretty tasty. I want you to picture a company you know. Maybe the one that made your phone or the one that ships you packages. Now, imagine that whole company, all its buildings, its people, its products, as one giant pizza.
So, when you buy a stock in that company, what you're really doing is buying one slice of that giant pizza. It's that simple. You're not just a customer anymore. You're actually a part owner. You own a tiny piece of everything.
And that, in a nutshell, is all a stock is. It's a share of ownership. The more slices you buy, the bigger your piece of the pie. Or, the pizza. This is so important to understand. You're not just betting on a ticker symbol. You're investing in a real business.
Okay, so a stock is a slice of a company. Got it. But where do these slices come from, and how do you actually get your hands on one? Let's get into the mechanics of how it all works.
Every stock's journey starts with something called an initial public offering, or IPO. This is like a company's big debut party. It's the moment a private company decides to go public by selling its very first batch of shares to raise money for things like growing the business or building new stuff.
Now this is interesting. There are actually two different markets for stocks. That IPO, it happens in what's called the primary market. That's where the company sells its shares directly to investors for the first time and collects the cash. But after that, all the action, all the day-to-day trading moves over to the secondary market. This is where you and I trade shares with each other. The company isn't directly involved here. This market is all about providing liquidity, which is just a fancy way of saying it makes it easy for you to buy or sell your shares.
And that secondary market has a name you definitely know: a stock exchange. Whether it's the NSE, BSE, the New York Stock Exchange, they're all just big, organized marketplaces. Their whole job is to connect buyers and sellers so you can trade those slices of pizza easily and at a fair price. Which brings us to the big question, right? Why do the prices of these slices change literally every second?
The answer is actually pretty simple, and it's a concept you already know: supply and demand. That's it. A stock's price is just a constant tug of war between how many people want to buy it and how many people want to sell it. Think about it. Let's say a company announces some amazing news, like incredible profits. Well, suddenly, everybody wants a piece of that pizza, right? Demand goes through the roof. When you have way more buyers and sellers, as you see here, the price gets pushed up because everyone's competing for those limited shares. And of course, the opposite is true. If a company has bad news, investors might get nervous and rush to sell. Now you've got a ton of supply, way more sellers than buyers. To find anyone to buy those shares, the price has to go down. It's really that fundamental tug-of-war driving prices every single day.
So now that you get the basic mechanics, let's talk about something that's maybe even more important: your mindset. Because believe me, how you approach this whole thing makes all the difference.
This is a huge point, so let it sink in. The stock market is not a lottery ticket. It's a skill. You have to learn it. It's just like learning to drive a car. You wouldn't just jump in and hope for the best, right? You shouldn't do that with your money either.
And really, there are two ways people go about it. You can chase that jackpot, making emotional decisions based on hype, which, let's be honest, usually doesn't end well. Or you can be a consistent learner. You can focus on understanding what you're buying, make logical decisions, and aim for steady growth over time. The second path might not be as thrilling minute to minute, but it's a much smarter way to build real wealth.
All right, to help you on that learning journey, let's do a quick lightning round. We're going to decode some of the common words you'll hear all the time.
Think bulls, bears, and even a little something extra you get for being an owner.
First up, a bull market. This is when everything's looking good, the market is charging forward, prices are going up, and people are feeling optimistic. Here's a little trick. Just think of a bull thrusting its horns upwards. You'll never forget it.
And on the other side, you've got a bear market. This is when things are gloomy, prices are falling, and confidence is low. And the way to remember this one, just picture a bear swiping its big claws downwards.
And finally, one of my favorites, the dividend. This is a fantastic perk. It's when a company is doing so well, it decides to share a piece of its profits directly with you, its part owners. It's like getting a cash bonus just for holding that slice of pizza.
Look, if you remember only one thing from our chat today, let it be this: learn before you invest. In this world, knowledge really is power. The more you learn, the better your decisions will be. And that time you spend educating yourself will pay you back over and over again.
So the stock market isn't a mysterious black box anymore, is it? You now know it's a system based on ownership, driven by supply and demand. You've got the foundation. So the real question isn't if you'll participate, but how. What kind of participant will you choose to be? The answer to that question is where your real journey begins.